Hey guys, Jake Carlson here, host of the Modern Leadership Podcast. Are you ready to focus on amplifying your leadership superpowers? Let's go. Good morning, my friends and fellow elite achievers. Welcome to Modern Leadership, the podcast where each week we sit down with authors, entrepreneurs, and leaders to explore their journey, diving into the ups, their downs, and ultimately the lessons they learned along the way. Our goal, of course, is to show that everything is figure-outable. Today's guest expert is Peter Lazaroff. Peter knew from a young age that he had a future in investing. You know, Peter, it's interesting. I'm kind of the same way. I knew from a young age that investing was very important to me. Today, you're the chief investment officer at Plancorp, managing over $4 billion for your clients. You have a unique, personable, kind of big brother perspective when it comes to working with your clients, simplifying the complex and making you a standout in your field. You're also the author of Making Money Simple. I love this, the complete guide to getting your financial house in order and keeping it that way forever. So welcome, Peter, to the Modern Leadership Podcast.
Hey, Jake, thanks for having me.
All right, so we got to get into this investing and talk about this. But before we do, give us a little background. Aside from business, what else do we need to know about Peter?
Well, I've loved investing from a very young age. And so I feel really fortunate to be one of those people who, when they were a kid, I think I wanted to do something with stocks, which could mean just about anything, especially at the age where I started thinking about it. But I've always been really passionate about music. So certainly when I got out of college, I'd been playing in our music school in college, but I played in a band around town 2-3 times a month out. Can't believe that people paid us because we had so much fun. And then I had 2 children, and that became really difficult to keep up. So I've sort of hit pause on that, but I am a very large sports fan. I love to read. I love to travel. But even when I'm reading and even when I'm traveling, somehow I feel like the world around me my brain just somehow relates it back to finances. And maybe that's because I'm constantly on the look for stories that can help people connect with issues that might seem complicated and not as approachable, but when you can put them in real life terms, it makes it easier. And I think I've become more and more obsessed with looking around me and trying to find those relatable moments.
Yeah, and to give you a little background, Peter, my father has been a stockbroker for over 40 years. You know, he started in the days where you had to pick up the phone and cold call people to get business. He went through the ups of the dot-com bubble and the downs of the dot-com bubble. And so investing and management of money has always been important to me. And it's not something we've dove into too much on this podcast. So I'm excited to get into it and talk about it a little bit. But before we do, sports fan. Could we make this a sports podcast? Maybe, because I love sports. But tell us, what sports are you into and who are your teams?
Well, I'm from St. Louis, and so I'm naturally a big fan of the St. Louis Cardinals and the Blues. I was a closet Rams fan after they left St. Louis for LA for a long time, and I think people caught on that I was still watching. So I suppose that I'm still a Rams fan, although I probably would not financially support the franchise anymore. I love fantasy sports, so I've been in a fantasy football league with the same group of individuals for, I believe, 26 years. And we were playing fantasy football back when you had to track it in a newspaper and keep score by hand, and there wasn't any of this online stuff. And I do a lot of fantasy baseball as well. So if there's a Major League Baseball game on or an NFL game on, I'm apt to watch it, regardless of my rooting interest in teams or players. I think I just have a lot of interest in the sport and the intricacies and the strategy.
Boy, you and I could get along and we could rap about this all day. And by the way, just as an aside, my son, who's 8 years old, just started playing hockey this year. And of course, they assigned him to the Blues. So we went out and got all the stickers for his helmet and everything. We are Sharks and Coyotes fans over here, but he happens to be a Blues fan. So very cool stuff. Let's talk investing. So you were interested in it from a young age, but tell us, what was your career path to get to where you're now the chief investment officer at this larger company?
Well, the path wasn't a straight line. And I think as I have gone on in my career, I realized most people who end up in leadership roles, it's not really a linear path. But when I came out of college, I had a background in economics and business, and I began taking a series of exams in the industry, the CFA exams. They are quite rigorous. I think 20% of people who start them successfully complete them. So there's a high bar for entry into having this designation, and it's chartered financial analyst. It really gives you a lot of deep dive investment analysis background. People usually equate it to like getting a self-study MBA. It's a master's class in investments. And at that point in time, I was a trader and an analyst. I was a member of a smaller firm's investment committee. But when I had completed my CFA exams, I began going out and trying to get clients. So you'd mentioned your father, a broker, picking up the phone and making calls. I wasn't necessarily cold calling, but I was meeting with somebody every single day. I looked at my calendar and saw that there was an opportunity to have somebody with breakfast or lunch or dinner or drinks or coffee. And that meant there were 15 opportunities to be in front of somebody. And I tried to be in front of 10 different people a week. And that meant meeting with a lot of really interesting people. And while it was very beneficial from a sales perspective, I think unintentionally the benefit was I met a lot of incredible people. I developed some really important mentorships. And so as my career grew from analyst to portfolio manager, where I'm really working directly with clients, I started taking on more responsibilities at my original firm. And I'd spent a little over 8 years there. And by the time I had transitioned over to Plancorp, I had, I believe, about $120 or $130 million of assets under management. However, I had learned so much from the people around me that I wanted to solve more problems. I wanted to be more involved on the business side, and I wanted to write more. And when I was 25 and going out to get clients, it was very difficult to give. We had $1 million investment minimum. It's very difficult to have people give a 25-year-old $1 million. People work hard for their earnings and they work hard for their comforts in life. And while you want them to believe that you'll help protect those comforts that they've worked hard to earn, I'm still a 25-year-old at that stage. And so I began writing, and I began writing a newsletter once a week, sending via email. And that really, I think, shaped a lot of my career in the sense that really there's a couple different ways that you can go about learning. My parents were both doctors. So I remember doing rounds with my dad in the morning, and he was a pediatrician, but he did some teaching for the Washington University Medical School in St. Louis. And he always talked about how there's the see one, do one, teach one aspect to learning. And I felt like writing was my teaching one for others. And I became very passionate about trying to simplify things as much as possible so that anybody could understand, because it helped me learn. And over time, I think that writing allowed me to clarify my own thinking. And as I decided to get involved in more of the business aspects at my prior firm and certainly here at Plancorp today, that clarity of thought was really important to knowing what it was I believed and how to execute. And so by the time I came to Plancorp, I came over as the director of investment research and spent some time in that role for, I guess, 2 years maybe, and then became co-chief investment officer along with our founder, Jeff Buckner, who started Plancorp in 1983. We were what you refer to today as a fee-only financial planning firm back in 1983. Before that was really a thing. We were acting as fiduciaries before we even knew what the word meant. But really what that means is that we only get fees from our clients for the financial planning and the investing. We don't get any commissions from funds or recommendations for insurance or estate planning and tax planning. And it has been a real blessing to come here to Plancorp because there are so many talented, motivated leaders, and I continue to learn every day. And I think for someone like me, if I'm not able to learn, I'm not sure that I will get much satisfaction out of my job. I do enjoy teaching others, but I also want to learn myself. It's one of the reasons I'm so jealous of your podcast, because you have all these amazing guests that you get to learn from every week, and your listeners obviously benefit from that as well. But I think that's been a really important part to my path. And I think writing and having external mentors meant that I took some turns and took some risks that was not a direct line to the position I'm in today.
And I want to talk about those turns and those risks a little bit, because as you started talking about your story a little bit, you said, you had 15 opportunities a week to get in front of people, and you're young. And what would you say to these individuals as you started having conversations that said, hey, I want to spend a few minutes with you. Let me buy you coffee, or let me sit down with you over lunch. How did you get face to face with these people by breaking down that barrier?
Well, it was easier when I was 25 than today when I'm 35, because today when I'm 35 and I'm an owner of a wealth management firm, they usually think I just want their money. And maybe that's true, candidly. But when you're 25, you just want to meet people. And so you reach out to people you admire. I usually spent the evenings at different networking events, whether it was tied to a nonprofit, or I know in St. Louis, we had the St. Louis Sports Commission, which was a nonprofit, but it was ultimately a large group of professionals who were driving sports in St. Louis. And so maybe you're going with a group to a hockey game and you meet somebody, and I send them an email and say, hey, it was really interesting hearing about your job. I'd love to go have a cup of coffee or grab lunch just to learn more about your background. And perhaps there's some way that you could give me advice on my career. And it was a very genuine approach. And maybe half the time, people were able to tell me something I had never heard before. And certainly as I've gotten older, maybe I've heard more of people's tricks and trades, but if you keep digging, you eventually find a new nugget that's very applicable to you. And for a handful of those individuals who I met, I said, well, hey, I'm actually looking for some external mentors. I'd love to meet with you 2-3 times a year, kind of pick your brain and let you know what I'm up to. I'm happy to, take you to lunch to do it, or dinner, or make it convenient. I can come to you, but I really value your input. And there's a wonderful book that so many people are familiar with, How to Win Friends and Influence People. And it talks a lot about how flattery is so important. And most people are flattered and want to talk about their background, their history. And when the first question is, well, so start from the beginning. Where'd you go to college? What'd you study? And then they're talking about their college life. And when I go home to my loving family, they don't want to hear about my college life and my accomplishments. They see me every day. So here I'm giving somebody an opportunity to tell their story. And as they're telling their story, I'm actively listening, which is incredibly important because I am a good question asker. I mean, that's really, I think, what allows me to get the information I need. It's the way that I learn best is by asking questions. And in these, early age meetings, I built out a network, not just of clients, but also of people who were genuinely interested in my success. And I think there was one nugget that I still grasp to, that one of someone who wasn't ultimately a former mentor, but I remember it was like the biggest nugget I got out of meeting this person was, a lot of success has to do with the people around you wanting you to be successful. So you can work hard and you can bulldoze the whole world, but ultimately, particularly at a big firm like mine, or when it's a success that is public, you need other people to support you and they need to want you to be successful. And so I think that's a really important piece of, building these network of support. And now we have this digital space where I spent so much time writing. Little did I know how much the internet would, I think we all knew the internet was going to continue to grow, but we didn't really understand what that meant.
Or how it was going to grow.
Yes. just the exponential growth. Back when I was doing this, even cell phone cameras were pretty poor. iPhones were still relatively new. And you think of all the things that we do. And I think of my LinkedIn following. When I do a LinkedIn live video, I would have had no idea I was going to do something like that. Podcasts weren't a thing yet. Blogs were only in their infancy, really. And so this was the way that you did it. But at the same time, I do think it's a little bit of a lost art. I think the digital space which might be a little overly nebulous to describe it, is very useful to everybody. It benefits everybody. However, I still think that the biggest benefit I get today is when I'm meeting face to face with somebody or via video call. I've not been afraid to reach out to people who do not live in my hometown and say, hey, I'll send you a link for a video meeting, but I'd love to pick your brain for 30 minutes because you're doing something that's really interesting to me and I just have to know more about it.
And do you find that when you do that people are open?
Yeah, I think people are very open. If they aren't, they might politely decline. They may not respond. But usually the type of people I'm reaching out to at this point with that sort of question, I'm putting a lot of thought into the message, into the email. Typically it's somebody I know something about. Maybe I've heard them on podcasts.
Or you may have a connection with them through somebody that you know.
Sure. That always helps as well. I think of when I was going out for endorsements for my book, the director of personal finance at Morningstar is someone who I really admired, but I had never met her before. And ultimately it required an introduction from somebody else who only loosely knew her. But once I got that introduction, that email was really important. And I had to communicate why she was such an influence on the way that I view personal finance and what her reading my book and considering an endorsement might be and what value it might be to her. Because I think if you can offer somebody else some sort of value in return, well, then suddenly they're more open. There's a lot of really just generous people who are willing to give their time, but the most successful people are really busy. And if you can offer anything of value or really showcase how you have a personal knowledge, like if I know that someone I'm reaching out to loves tacos because I listen to their podcast and they talk about tacos all the time. I say, hey, I'm going to be in wherever. Let's say I'm going to be in Austin. I'm thinking of someone, and I'd love to go buy you tacos. Well, then that person immediately knows that I know something about them. And sure, a meal maybe isn't a huge thing of value, but it shows that I really care and that I know something personal about them.
Well, and I think what you're saying is being intentional. It's not just about throwing a bunch of random requests out there. And I'll be honest with you, I'm a small player, but I got a 3-foot stack of books in my office right now of people that have sent in the last month books to become guests on this podcast. And I get about 8 or 9 requests for interviews every single week. And I can't do that many interviews. I can't jump on with that many people. So I have to be really selective of what rises to the top of the pile for me. And it really has to do for me with how well do they know and understand what I'm doing and what I'm trying to communicate, and also who they know. And if I get an introduction from either one of the publicists that I use or one of the groups that I'm a part of, well, then I'm much more interested and willing to go forward with that. Now, Peter, this has been a great conversation about kind of mentoring and how you've built your position and your reputation in the business. We got to save time to talk about this great new book, Making Money Simple. And the first question I want to ask you, last night I was sitting down with a client, and I do trust and estates. I own a law firm. And so in working with this client, we got to the point of money management and how she should have her money managed. And she asked me, of course, if I did this, and I don't because it's not in my business. But I said, I do have people I can refer you to. And her immediate reaction was, how will I know I can trust them? How do I know that I can trust the people that are going to be, taking my life savings and my future and my retirement and putting it to good use?
It's a really good question. It's a shockingly difficult thing for an investor or just, anybody to discern whether someone is putting their interest first. And it's amazing. I don't know if it's the language or the nuances or the way that some firms get around it, but when you go to a doctor, you assume if they're prescribing you medicine that it's in your best interest. And, when someone comes to you, they assume that the legal advice you're giving them is suited in their best interest, that you're not somehow benefiting from it. So for an advisor, there is a lot of conflict of interest. And I think one thing that firms like ours will even shy away from is that there is no such thing as a firm with zero conflict of interest. You can be very clear about how you're compensated. You can be very clear about what could potentially be a conflict and what could potentially cause bias as you're delivering advice. But it's very confusing. And I do have a worksheet on my website, peterlazaroff.com/resources called How to Interview an Advisor. And that goes into a lot of detail on just the process of finding someone who, one, acts as a fiduciary. So a fiduciary simply just means that they're required by law to act in your best interest at all times.
To put your interest in front of their own, yes.
Now, the challenge is there are some people who are duly registered, and that means that sometimes they can build you a financial plan and act as a fiduciary while they're giving advice. But then when it comes to implementing that plan, they can remove their fiduciary hat and start selling you things that maybe aren't in your best interest. And that's pretty confusing. So I think it's really important to get in writing that you'll act as a fiduciary at all times. You're typically looking for a firm that's called a registered investment advisor, an RIA. But again, some of these people are duly registered and they're not acting that way. So if you go and download this resource, it's called How to Interview an Advisor. It's at peterlazaroff.com/resources or wealthworksheets.com if that's easier to spell.
And we'll link it up on the show notes so they can just go and click right on there.
Terrific. And so I think that, from that point, I think that's the most important piece is finding someone who by law is required to. Now, whether or not you trust them, that's different. That's very personal. And this interview questions I've laid out provides you a way to score interviews of multiple advisors. And I think that's really important because most people who are looking for advisors, it's not like they spend one day interviewing 3 different advisors. Advisor interviews can sometimes stretch out weeks or months, and you sort of forget how you feel. And the people who are really great at sales and relationship building might not be as technically strong. And similarly, there could be someone who's technically strong, but you weren't really understanding, the messaging they provide. So you would say, well, gosh, I wish they would have said it simpler. How am I going to work with somebody if I don't understand what they're doing? So there's no magic formula. I do think the fiduciary aspect is what you're 100% looking for in an advisor. Why wouldn't you want an advisor that is always putting your interest above their own? And then beyond that, I think asking the right questions, and there's a series of 12 questions I have out there, and they're also in the book that makes it a little easier to ask meaningful questions that uncover what are potential conflicts of interest, what are the ways that my advisor is compensated. What if something happens to this person who is amazing and I want to hire? If they change firms, what happens? If they retire, what happens? If they get hit by a bus, what happens? What's the depth of the bench? What's the investment philosophy? How often am I going to be communicating with them? Or are they going to be reaching out to me? It's up to you. I think when you hire an advisor, you're really making an investment in yourself. It's not a cheap one either. It certainly costs money. I really tell people you owe it to yourself to be very diligent about that hiring process. You shouldn't do it on a whim. And hopefully the worksheet I've created with these questions in a scoring system creates a way to be objective and thoughtful and intentional through the process. As I think of portfolio construction, so as you mentioned at the onset of the episode, I am overseeing a little over $4 billion in assets for 1,300 clients here at the firm. And when I take any approach to making a decision, we want it to be as scientific and process-driven as possible. Because when you stick to a process that does remove a lot of the biases and it does work around a lot of our human tendencies to make silly decisions for all the wrong reasons. And this is a really important one, and it's a really expensive one, and you owe it to yourself to be highly diligent with the process.
Well, and part of that decision is when should you hire an advisor? Because one of the things that I get asked a lot is, well, I only have a couple of nickels to rub together, and a lot of these advisors require a minimum of $1 million. Is it worth getting involved in financial advising before I reach, let's say, $500,000 in assets or net worth?
So I always tell people the earlier I can reach them, the bigger difference I can make in their life. So if I can work with you in your 20s, I'm going to change the trajectory of your retirement. And I can't guarantee that, but that's the way I feel about it, because the type of changes a good advisor will make, they may seem small and not that noticeable in the short run, but when compounding over multiple decades, and not just compounding in your portfolio, it's saving on taxes, it's making small savings allocation decisions that make a huge difference over the course of multiple decades. And fortunately, there has been an explosion in at least good, accessible, low-cost investment advice via robo-advisors. So I think 10 years ago was right when Wealthfront and Betterment sort of came to market and offered a way to have super low-cost, highly diversified investment advice. We launched our own robo-advisor called BrightPlan. And if listeners want to try that out, they can go to brightplan.com/Peter and get a free month trial of it. But all these digital advice platforms now offer access to an advisor. And so when I think of BrightPlan, all you need is $500 to invest. And suddenly you get to talk to a Plancorp advisor who is normally dealing with people with at least $1 million of assets, but even more likely $3 to $10 million in assets.
And that's one of the amazing things right now in our time in history is that information is becoming much more democratized. I mean, more and more people have access to information, and therefore, we can make strategic, collaborative decisions with our advisor rather than our advisor just telling us, you need to do this, trust me on it. We can all go into the situation, the conversation, and say, this is the research I've done. How does that play out with your strategy and your philosophy in managing money for the long haul?
Yes, because there's no black and white in financial planning and investing. There's no such thing as a perfect portfolio. It's really just the one you can stick with for as long as humanly possible. And I think that's part of why this profession has been so wonderful to me, because you're solving different puzzles all the time. But it's a mix of calculus and psychology, because I can give you the mathematically optimal solution in your financial plan or your portfolio. But if you don't understand it, or you can't stick with the strategy, or it's mentally taxing for some reason, well, then it's not worth anything. And so, yes, it is a collaborative process. I think the way that you go through building a plan should be very process-oriented and not deviate, but the solution itself that you arrive at absolutely should be customized based on the individual's or their family's needs.
All right. Well, as we run down on time for this episode, there is one question that's been burning on my mind, something that's very important to me, and this is the idea of lifestyle creep and how it sabotages our goals. Because I think I look around my neighbors and I know the general income ranges of my neighborhood. I know how much they're bringing home. I have a general idea of what their houses cost. I can look at their cars and I see that this lifestyle creep is happening all around me. And I want to ask your thoughts on how this is sabotaging our long-term goals of profitability as business owners or as just having enough money to make it through the end of our lives as normal citizens.
Well, let me put it this way. If you were to put your hand in a bowl of lukewarm water and you start heating it up, you're unlikely to notice the rising temperature because your hand is going to adapt to that gradual change in temperature. But eventually the water is going to get to a point where it's so hot that it can burn you and you absolutely will notice. It just doesn't immediately register. Now, of course, if you remove your hand from that bowl of hot water and dunk it into a bowl of ice water, you're going to notice that temperature difference immediately, and it isn't going to feel good. And this is a lot of how lifestyle creep happens in our financial lives, because every year, most people get some kind of raise. They earn a little bit more, and without a plan to save that raise, it's very easy to use up the additional cash flow by adding a few luxuries to your regular spending. And that can be adding premium cable channels, more expensive bottles of wine, maybe more frequent phone upgrades or better seats in an event or impulse buys on Amazon, staying at nicer hotels, whatever. Each of those things individually are not harmful, especially if you're earning more and can afford these luxuries. But the little things have a way of adding up. And before you know it, much like your hand in the water, you adapt without really even noticing. And so when it comes time to think about retirement, if your lifestyle is expanded to a place that is not sustainable in retirement or is preventing you from saving, it becomes very hard to do to shut down some of that spending. It is like dunking your warm hand into the ice water. And so I think in the studies from like the Labor Department as well as the Federal Reserve show that most of your income growth comes in your 20s, 30s, and 40s. But in your 40s, it's coming late 30s, and all throughout your 40s, that income growth is coming at a declining pace. And so with your finances, the earlier you have a plan to make savings of your raises, the more likely you're able to stomp out lifestyle creep. Automation is a really key part of that in terms of building a system that makes it easy to direct dollars to the things that matter most and keep us on track for reaching our goals. But if you're in your 50s and 60s and you've never really increased your savings along with your raises, well, there are things you can do, but it is going to hurt a little more. Fortunately, we have experience there, and there are little strategies for if you're spending too much, little exercises you can do to make changes, saving changes at the margin, as well as some bigger ones. And there's kind of a priority of where it hurts most versus where it hurts less. But ultimately, this lifestyle creep is something that happens to all of us. We're never really aware of it. And look, I'm totally part of it too. I absolutely have lifestyle creep each and every year. And I think once you have children, that's obviously one of the largest sources of lifestyle creep because you can't always control it, or at least it feels like you can't control it. But even as your children have grown up and gone to college, or before having children, that's the time where you really have control. And so your savings rate is very important. It doesn't mean that you shouldn't spend more money over time. I mentioned early on, if you're earning these comforts and working hard for these comforts in your life, that's great, but you need to have a plan that protects those so that you're not dunking your hand in cold water.
Yeah, I love this, and I know that we could get way more into this, but alas, we're running low on time, and we need to shift gears to our Learning from Leaders. We're going to direct the audience to go and pick up a copy of your book, and of course, at the end of the episode, we'll give you a chance to share where they can go and do that. But for this point, let's jump over to our next section, Learning from Leaders, and talk a little bit about these personal questions to go along with the business advice that you've given. How does that sound?
Sounds great.
All right. The first question then is the book currently on your Kindle or bedside table. What are you reading these days?
So I'm usually reading 2 books at once. And the 2 books I have going right now, one came out pretty recently. It's The Man Who Solved the Market, How Jim Simons Launched the Quant Fund Revolution. And this is arguably the greatest investment fund of our lifetime. It's better than Buffett, better than Soros, better than Peter Lynch. It's really the revolutionary quant approach, and they've earned something like 66% per year. And this fund isn't open to anybody. It's really just the employees. But that's been really, it's actually an interesting exercise. It's less about investing. It certainly shows you how hard it is to beat the market, but it's even more fascinating how Jim Simons is just a great builder of teams. And so for leaders, I actually think it was kind of sneaky. That's not the takeaway I would have expected from the book. I'm nearly done, but I'm certainly finding more about team building and culling through a team's ideas in that particular book. And the other one is called K, A History in Baseball in 10 Pitches. And that one's a little lighter. And it's going through the slider, the fast. Each chapter is a different pitch, the curveball, the knuckleball, the splitter, and talking to a pitcher and both the history of the pitch and, how it's viewed from a hitter's standpoint, a pitcher's standpoint. It's been very interesting. And me as a baseball fan is just devouring it.
Yeah. And being a baseball fan myself, I love, when you're watching the baseball on TV and they show you how the release is at the same point. The pitcher will throw the ball, look exactly the same at the point of release, and then they'll show you the trajectory of the 3 different pitches and where it goes from the point of release. And you say at 90 to 100 miles an hour, how does anybody see that little nuance and switch that ends up so far different?
Yeah, especially with all the video now, you can see what they call the pitch tunneling and how they're basically following the exact same track until the last minute, and really unbelievable. What a major league, even an average major league hitter or a below average major league hitter is an incredible hand-eye coordination expert.
Yeah, absolutely. All right. Our next question then is your leadership superpower.
So I think my leadership superpower is asking questions. It's part of what makes me good as our chief investment officer, asking questions both for my own benefit, asking questions for if there's a presenter, their benefit, asking questions for the rest of the room's benefit. When people start asking questions, I know that they're actively listening. For me, I tend not to retain to oral instruction or oral presentations without asking questions. If I'm able to write, then I'm usually okay. But question asking is something that I think has helped me dig. And particularly when you're working with clients, there's always a question behind the question. So they might come to us with a question about interest rates, but that's maybe not what really is the main concern. To me, there's always a question behind a question. And I think my ability to ask the right questions has always been something that's been very beneficial to myself and those around me.
How about a motivational quote, philosophy, or mantra that you live by?
Well, I always feel like it's silly, but I love the quote, "The rules are there are no rules," which is Oscar Wilde. And I think that resonated with me so long ago because if you are going to do something special, you do need to think outside the box. And I like guidelines more than rules. Guidelines imply flexibility. Rules imply something that, is maybe true. And even science, a lot of science, we have a process where we have our best guess at what it is based on probabilities, but there's like this fraction of a chance we're wrong about things. I think that when you're ready to break rules and realize that there are no set rules and making something better is really when you can open up your mind to something great.
Yeah, I think you're absolutely right about this. I think it's we could probably have a couple of episodes where we talk just about this idea of rules and, what they mean. I've been reading this book, actually just finished it yesterday. Actually, this morning I finished it. And the conversation is this improv of saying yes and as opposed to saying yes but, and what it does to the conversation when you put constraints on it versus when you open it up and say, yes, we can do that. And what else can we do? So terrific quote mantra there. Our last question is the book that you most often gift or refer to friends, family, and colleagues.
Well, at the moment, it's my own book, but that's a little bit cheating. So I would say prior to me having my own book, I have been giving out Happy Money, The Science of Happier Spending. It's written by Elizabeth Dunn and Michael Norton. Probably more people than any other book. If they're super into investing and I understand things that they have read, I'm also a really big fan of The Success Equation, untangling skill and luck in business, sports, and investing. Although I tend not to give that unless I know that they have a real good investment foundation. But Happy Money is really approachable, fascinating studies, and so much of personal finance, financial planning advice is how to save your money. This book is all about how to spend your money to derive the most happiness. So I think it's the missing part of a lot of the equation for people as they deal with their money on a day-to-day basis.
And I think sometimes looking at things from the alternative, not how do I save money, but how do I spend money that would create this lifestyle. I think when we look at the alternative, it opens up different thoughts, different patterns for us. So that sounds like a very fascinating read. Peter, we appreciate you coming on the podcast today. You've been a fantastic expert. Tell us, before we let you go, how can we pick up a copy of Making Money Simple and find out more about you?
So Making Money Simple is sold anywhere books are sold. Obviously, Amazon is where most people go, but I believe it is in many bookstores across the country still. You can follow anything I do at peterlazaroff.com. So I write for Forbes and the Wall Street Journal and obviously for the Plancorp blog, but anything I ever write or do ends up on my own page. And a final thing I'll put out there is I developed a quick quiz called smartmoneyquiz.com. It's just 9 simple questions. And it points you to resources that would be most useful given where you are in your situation. So if you're looking to improve your finances in any way, there's no hard advice, but it does identify where you are in life. And here are some resources that might help you at this stage.
And we'll link all of these up on the show notes for this episode. Peter, thank you for coming on today, for being our modern leadership guest expert.
Jake, thank you so much for having me.
All right, my friends, what did you think of that? Very fascinating conversation. Something that's always on my mind is this: how do we know when it's time to have a financial advisor? How do we know that we can trust a financial advisor? How much assets do we need to have in order to have a financial advisor? And I was mentioning during the episode that just last night I was sitting down with a client of my law firm and we had this exact conversation. And so it was perfect to have Peter on the show today and really ask him the questions that were on my mind. Of course, everything that we talked about can be found on the show notes for this episode, which is jakeacarlson.com/ML163. And just so you know, I've added links to all of those articles that Peter talked about in the episode, the how to select an advisor and the smart money quiz of how to figure out, the 9 questions that he mentioned right at the end. All of that is on the show notes. Until next week, I want to wish you the very best of days, an even better life. And of course, remember, everything is figure-outable. Thanks for listening to the Modern Leadership Podcast. You can find me on Facebook at Speaker Jake, on Twitter at Jake A. Carlson, and of course the website, jakeacarlson.com. See you there.